One, if you live in a capitalistic society, you got to learn this concept. This concept is called income shifting. Income shifting. Income shifting basically means I understand that in America, I only get paid in 3 ways, or there are 3 types of income I can generate in a capitalistic society. The first one is the most popular. The first way that most people choose to get paid is a W-2. Now, notice I said choose to get paid because you got options. It's just that the system pretty much puts you in a W-2 option. That's the one they promote the hardest. Also known as a what? A job. Make sense? So this is the job situation, and a job pays you on a format called a W-2. The second way you can choose to get paid in America, notice I said choose, is because you have a choice, is a 1099. A 1099 is also known as a business or a small business. We're going to show you the advantages of a 1099. And the third way that you can choose to get paid is investments. So it's really elementary. Investments, also known as capital gains, appreciation, dividends. The goal for all of us in this room is to take your money from your W-2, invest it through some type of business, and ultimately end up where all your money is making you what? Making you money. That's where you want to end up. You want to make it where the majority of your income is coming from investments. Here's why. A W-2 is taxed the most out of all 3 income streams. A W-2 is the one that says, I want the government to take my money off the top. So I'm going to give the government 28 to 33% of my income before I see a dime. Now, here's my thing. There's nothing wrong with a job. There's nothing wrong with a W-2. Just know that that's the game that you signed up for when you had more choices. But again, if you have a W-2, it's no problem, but start making your way this way so you can give yourself a pay raise, and we teach you how to do it. This guy right here says, you know what? I'm going to get taxed 15 to 23%. Now, that's way better than 28 to 33. But it's not as good as this guy down here. Money says I get taxed less than 10%. Now, I'm not the smartest person in the world. I have an English degree, not a math degree. But my numbers up here do tell me that if I can get a government less than 10%, instead of giving the government, up to 33%, I need to really start finding a way to give the government less money. So here's the concept. Instead of always trying to get people to make more money, let's give away less money, and that's giving yourself a pay raise, and I'm gonna prove it to you. All right. So here's the philosophy. We talked about the 3 avenues of income and about how much they get taxed. Here's the philosophy of each of these different organizations, or each of these different individuals, I should say. I'm sorry. This person says, I'm gonna work. I work. I pay taxes. Then I spend. That's just the way it is. That's the philosophy of a W-2 person. Robert Kiyosaki said it best. Rich Dad, Poor Dad, Cash Flow Quadrants, all of his books. He talks about this. I'm going to work first. I'm going to pay taxes second. And I'm going to spend what? Last. This person says my business is going to work. I'm going to spend second. And I'm going to pay taxes third. That formula and that attitude alone puts more money back in your pocket because the government rewards 1099s and business people before they reward W-2s and jobs. This person wants the taxes to come off first. This person wants the taxes to come off last. Now, I don't know about y'all, but I just feel like if I'm doing the work, I need to get paid when? First. This group right here, or this attitude is my money is going to work first. I'm going to spend second, and I'm going to pay taxes when? Last. So either way, these 2 are more beneficial because you pay taxes in the end. So let's get into it. How in the world do you literally shift your income from one income stream to the next? All right, this is real simple. In our company, we teach you 3 strategies to go from the highest tax bracket or the highest form of being taxed to the lowest form of being taxed. 3 strategies. Okay, remember I told you it's 3 solutions to your 4 problems. Strategy one is create what's called a positive cash flow cycle. We also call it cash flow success. Most people have a cycle of cash flow failure. The first thing we got to do in order to make our way over here is take your current income without you having to market or sell a dime and create a cash flow what cycle? Success. Most people have a cash flow what? Failure. So the first thing we got to do is flip that. Here's what a cash flow failure cycle is. Your lack of money is costing you money. In other words, who can relate to this? Now, just be honest. Either you know somebody or yourself, because I've been there, I've done that. The bills are late, so all of them got a little late fee on them, right? The lights ain't off, but the light bill may have been $130, but yours $155 because $25 late fee, right? Everybody can relate to that. The gas is not off, but if you look at all your bills, there's a gas fee. See, the lack of money is costing you money. The rent is late. It's due on the 5th, but I get paid on the 7th. So unfortunately, I just got to pay mine on the what? On the 7th. The lack of money costs you money. So if your rent is $11.50, but you're paying $12.50 only because it's late, your lack of money is costing you what? Costing you money. See, that's cash flow failure. I don't have enough money to afford a real good CPA, so my cousin does my taxes for free. And in America, you get what you pay for. So your cousin doing your taxes, that's all good. But I bet you overpaying in what? You overpaying taxes. So because you don't have enough money for a CPA, your lack of money is costing you money. The more money you have, the less money you spend. That's capitalism. So if you go into a car lot and your credit is bad, your interest rate is going to be awful what? Awful high. You go into a car lot and you got $200,000 cash and the Porsche is $90,000, you can talk them what? Down. Your lack of money costs you money. But when you got money, you got leverage. So the first thing we got to do is flip your current situation around so that you got more cash flow coming into your own household. And before we show you anything else, you got to make your money positive and not what? Not negative. I go stroke a check. I know it ain't there, but I'm going to try to beat it to the bank. I swipe my debit card and I'm going to try to beat it. $36, late fee, 40, whatever, $28. My lack of money costs me what? Money. See, here's what people miss. You might say to yourself, well, Brian, them little late fees, not really a big deal on my gas bill, cell phone bill, credit card bill. When you add each of those up per month, let's just say it's $50. Multiply that by 12, that's $600. Multiply that by your working years, times 40 years. You in late fees pay tens of thousands of dollars in late fees. Now, if you had those late fees back and you were investing them, that's where your $1 million is. Your $1 million, you got your $1 million, is caught up in negative cash flow. So strategy one, convert you from cash flow failure to cash flow what? Success. Using your own what? Money. Here's how you do it. Here's the first thing you need to do. The first thing most Americans need to understand is their W-4 is filled out wrong. That's the form you filled out when you first got your job that told the government how much taxes to take out. Most people filled it out so long ago, and human resources really can't help you fill it out. And most people don't understand the W-4 and didn't claim or didn't have enough exemptions and gave the government the majority of their money. Now, if you go to irs.gov on the website, it states most people, which is 114 million Americans, have their form filled out incorrectly. It says they are overpaying taxes on average of $40 a week too much. Now, last time I checked, $40 a week times 4 is $160 per what? Month. Do you think if you had an extra $160 come back into your check, it might be able to cut off some of them late fees and flip that around, right? So the first thing we do is we tell people, adjust your W-4, and here's why. People think that getting a refund check in America, like your accountant or the person who does your taxes did you a big favor. They really didn't. It's called a refund. That means we took all this money out your paycheck. We're going to give it back to you in April after collectively the government went and made a whole bunch of what off our money? They made a whole bunch of money. Now, the government doesn't give you the interest that your money made. They just give you what they took. So last time I checked, I don't know anybody in this room that wouldn't, if you owned a bank, you going to lend me some money and then we just going to break even. That's basically what you're doing on your tax refund. You're giving the government all your money during the year, and then on your refund, you break what? Break even. And then we celebrate like, man, I got $5,000 back. What if you went ahead and just had your $5,000 throughout the year? You probably could have been paying down some of the things that's causing you to be in the negative what? Cash flow cycle. So we tell people the first thing you need to do is take a serious look at your W-4 because 114 million people have it filled out incorrectly. The IRS website states most people may be using their tax returns as a forced savings. Who know I'm telling the truth, right? It's a forced savings. You know it's a big check coming back, and because most people don't have discipline, they look forward to that big check. The IRS website states you may be better off paying down debts. That's on the IRS website. So Uncle Sam is telling you, look, why are you giving all your money to us when you really could be using it during the year to get yourself out of debt? And now you won't get this big refund check in April, but you have money now that you can invest and create a refund retirement account. See the difference? So that's the first thing we teach you. When you adjust your W-4, then we teach you, okay, so let's look at this. We adjusted the W-4, so your income went up, but your taxes went what? Down. Now we teach you how to use the tax money that you were paying and put it on all your extra what? On all your debt. Now your debt is going where? Down. Then we show you how to change your behavior because we have a software where you input all these numbers, real simple, plug and play, and you start seeing the program work. You're like, man, I've been eating out a lot. Man, if I just got rid of this bill, if I just got rid of that bill, I'd have an extra $230 a month. If I wasn't paying so much money over here, I could take that $230 and put it over here. I'm going to show you a true story of how this works. So once your income has an increase, your taxes, debt, and expenses have a decrease, you start flipping your cash flow cycle what? Around. From negative to what? Positive. Give you guys a startling statistic just on this right here alone. If the government is taking a third of your income, that basically means you're working from January to April for free every year, because that's a third of the what? Of the year. So if you're giving the government a third of your money, you're also giving them a third of your what? Of your time. So from January to April, you're working for free. From May to August, you work for the banks. Because since the government took your money from January to April, you end up borrowing May to what? August. So now the banks took the other third. You start getting paid in September. So from September, October, November, December, finally you getting paid because that's the third that you got to keep. Now, I don't know about y'all, but I'm not into waking up every day going to work just to pay taxes and keep the system going and going to work just to pay the banks back because I'm borrowing money. And then I struggle on what's left. And guess what? I haven't eaten yet or paid any bills. That's just what's left. Now we got to live off what's left. Let's put some numbers in here. Let's give you a reality check. You make $50,000 a year salary. Off the top, government's going to take 18. So you take home 32. Now, because the government took 18, you go float the rest on a credit card. So you trying to get your 50 back, but you borrowed it. And you know what you borrowed, you must pay back. So you gave 18 to the government. You gave another 18 to the banks, but you still feel like because you borrowed it, you feel like you make what? 50. But it's paper money. It ain't real money. It's paper money. So you got to end up giving it back. So in reality, we got to take another 18 off. So now you got to live off 14 off your $50,000 a year job. That's just the way it is. So now you got to eat, travel, and do everything else with this. That's why most Americans, when you jump in this game right here, the rat race began the minute you got in. So how do we fix it? Here's what people I'm gonna give you a success story, then I'm gonna tell you how to correct it.